Hello, everyone. Welcome to Stock Talk Thursday. It is March 31st, and we are going to look at a quick recap of last week and see what was hot last week and what was not. And then we're going to move on to this week and see what was hot, what was not. I'm glad you guys are here today. Love for this to be interactive, so please go ahead and throw in your comments. There should be a little comment section. If you've got any questions, throw in your questions as well. Or if you've got a stock that you're looking at that you think, hey, this might be hot or this might be not, go ahead and throw that out too. I'd love to go ahead and pull that up on the screen and take a look at that with everyone. So anyway, let's jump right in. Let's get a quick look at the overall market, see what's been going on. So I'll pull up the chart here. There we go. So we're looking at the S&P right now. Of course, this is the overall market, how we look at things. And you know what? Last week we were in that squirrel market. And it was a short squirrel market because we've already called it off and we are back into a bull. So here's what's going on. We have this downtrend line right here. And we hit, 1, 2, 3 points, 4 here, but it broke through and it broke through decisively. Initially, we were thinking, well, it's just sitting right below the 50. It's that kind of below the 50 here and, it didn't last long here. So that 50 EMA, that might be resistance. Nope. Next day, it kept moving up. And then it kept moving up, had a little pullback, kept moving up again, broke through these, the 100 simple and the 200 simple moving averages. And now we're on top of all the moving averages. And our moving averages have actually are starting to stack more bullish. We've got the 10, the red line right here, and that's sitting right above the 20, and the 20 has just crossed the 50. These are all bullish indicators. Now, I will say, while we have called a bull market, I want to go ahead and call it a cautious bull market. We still need to be careful. Still a lot of volatility in the market. Still a lot that's going on. One thing that I find crazy, and this is why it holds me back a little bit, or at least makes me want to consider smaller position sizes, is we still have the war going on. We still have inflation at record highs. COVID isn't gone. It's still here. It's not as bad as what it was maybe a year ago at this time, but there's still a lot of, very negative things going on. So how is it that we are in this, this would be called a raging bull the last couple weeks here. We're down at 4,200. Now we're, at times above 4,600. That is pretty crazy. So what's going on there? Well, that's why for a while we had the squirrel market going on because, technicals and market tone did not match up. We are kind of entering into a cautious bull market, but we just got to be careful. I want to bring our attention real quick to let's look at the COVID crash, right? This is the COVID crash right in here. And that only lasted 1 month in the market. The market acted as if COVID only lasted 1 month, but COVID's been going on for the last 2 years. So we have almost a similar thing going on here where not all of this downtrend was because of the war, but here we go. Oops. Let's pull up the 6-month chart. Scooted over. So, this part moving down right here was because of the war. And, things were kind of leading up to that with this downtrend. And now, the market's acting like the war's over and it's all done. It's all good to go. So it's kind of interesting. The market doesn't always give a fair picture of what's going on in the world. But since things don't always match up very well, it kind of makes me a little bit cautious. So that's something to consider as we, look at these stocks that are hot and what's not. And as you're looking at other stocks that potentially trade. All right. I see we've got a question here. Thoughts on buying leap calls or wait a little longer? Yeah, that's a great question. I'm glad you brought that up. I don't see your name here, so it just says Facebook user, but regardless, that's a good question. So let's talk real quick about what a leap is. A leap, and I think I might botch what is called long-term equity anticipation plan. If it's not that, it's really close to that. Essentially, it's a call option that is with an expiration of 12 months or longer. So it is a long-term call option. You might consider doing this with longer-term investing money versus short-term trading money. And so thoughts on buying a leap call? Well, if you believe that the market is in for longer term bullish action, then you could do so. There's a lot of evidence out there, or a lot of indicators out there that are pointing the other direction. There's a lot of indicators that are pointing to we might have a recession coming. And, we were in this downtrend for a while, and now it's pulled back up. So that's kind of like, all right, well, what's going on here? But watch real closely. If we get up to this 4,800 level, and if it starts moving down again, what would that look like, right? Let's pull up a bigger picture. If we move up, come down, move up again, and start down, what did we just create? We just created a massive M pattern. And as we know, an M pattern can be a more of a bearish indicator. This might be a better one to look at on a weekly chart. Here we go. We have this nice strong bull, and then down, up, and that's kind of a big question mark right there. If we break out of the 4,800 level, start making all-time highs, and we start producing a pattern that looks more like this area right in here, those leap calls could absolutely work. But if we start moving down from this area right here, we might be looking at more bearish action and an actual recession. So there's always risk. Whatever you do in trading or investing, there's always risk. All right. Thank you for bringing up that question. I hope that helps some. Let's go ahead and take a look at what was hot last week. And for that, if you remember, we've got Mosaic. They're a fertilizer company, and wow, they're still hot, right? So last week we were looking at, I believe, this candle right in here. And we're right about the same level right now. It did move down a little bit. I mean, honestly, it was so hot. It needed a chance to, let me go ahead and put the banner up. These are kind of cool to play with. Boom, last week's hot stock. Woo-hoo. All right, there we go. So, honestly, this guy was so hot, it needed a rest, right? We've used that analogy before of like climbing up the mountain. And if you're climbing a mountain, at some point, you just need to take a rest, and before you can start climbing up more. Well, that's what it did here. It pulled back some, bounced off of, I bet that's the 34 exponential moving average. Usually when there's a bounce between the 20 and the 50, it's the 34. So I've got this pulled up on a different profile. Let's pull that up. Oh, just above the 34, actually. In this case right now, my blue line will be the 34. So still in between there. Regardless of how you look at it, it bounced nicely, and then today is up nicely again. So MOS still a hot stock for today. MHK, Mohawk Industries, was our not hot stock. So let's pull that one up. There we go. Last week's not hot stock. You can see that it's just been downtrending. Still below this line, actually extended downward from this downtrending line. If we look at a yearly, we can see more of the history on that line. Extended down below that, and zooming in again here, you can see it's not gotten any better. Last week we were at this candle right here. Moved down, popped back up, found probably a similar area of resistance as back in here, just a little bit below that 50 EMA, and then got pushed back down. It's down today, and it's threatening to make some more lows below the previous low back here in early March. So even this might be a stretch of a pattern, but I almost see a little head, shoulders, or shoulder, head, shoulder right there. Little head and shoulders. You don't usually just see that on a downtrend, but that might be a stretch of a pattern right there. But regardless, this thing is a bit bearish. Definitely a not hot stock. All right. So with that, let's go ahead and move on to this week, and let's see what's new this week and what we got going on. So first one we're going to pull up is Lithium Americas Corp. And check out the pattern on this one. We got a few different ways to look at this. So first thing that caught my eye was actually not the candlesticks although that is pretty fantastic. Look at this volume. The volume was through the roof yesterday compared to normal. It hasn't had that high of a volume day, and this was not on earnings. You usually see volume spikes on earnings, but this was not on earnings. The last time the volume was that high was way back here, early last year, where they had a really nice run up. So what is going on? Why is lithium? It's up in the last 2 weeks alone, up 50%. I mean, back here, March 15th, that was just a couple weeks ago, down to $24 a share. And now it's up past, $38 a share, past 38, pushing up towards these all-time highs. We could almost go ahead and let's just drop right there, a horizontal line. So we have some context as we were going up to that line, right at about $41 there. Massive move up yesterday. Today we have follow through. So a lot going on there. And it's not just the last 2 weeks that this thing has been pretty hot. Let's look at a yearly, and you can see down here back in May last year, we were down at about $12 a share and now up 38. So that's more than 3 times growth right there. For fun, let's take a look at a 3-year weekly chart and take a look all the way down here. It's almost covered up by the earnings reports right there. That's how low it was after the COVID crash. This little guy right here, that's the COVID crash. Now, percentage-wise, that wasn't little because it was up at about $5, went down to about $2. It's pretty deep crash right there. But it was $2 2 years ago, almost of the day. And now we're up at $38. And it's been there before. It's actually gone up to over $40 before. So that is massive growth. We're talking about 18-fold right there, 18 times higher. So big things happening in lithium. And, that begs the question like, well, why? What's going on with that? So did a little digging, found out that President Biden ordered an in-depth analysis and recommendations to strengthen lithium supply chain from mining raw materials to lithium battery production. We all have heard of lithium-ion batteries. They're in our phones, in the computers. They're now in these electric vehicles. They call lithium the white gold, right? It's the next thing. It's what's going on. It's the white gold, and that's just kind of a way to visualize the value of that. And the U.S., we've recognized that we've been a little bit behind in lithium mining production. I know China has been ahead of us and everything, so now we're trying to play catch up. And so when President Biden ordered this in-depth analysis and asking for recommendations of how we can do better and strengthen our position there, that sent lithium sky high recently. So that's what we're looking at in the last couple weeks here. That's a big part of that. Real quick fun fact, look at this here. Nice bounce off the 50-period moving average. This is not the 50-day anymore. It's the 50-period because I'm looking at a weekly chart. So this would be like a 50-week exponential moving average. Nice bounce there. Had it again. Looks like that lithium likes to have the 50 weekly period as its nice strong support. So that is LAC, Lithium Americas Corporation. That is our hot stock of the week. All right, let's jump over to the not hot stock of the week. There we go. And we're looking at Chewy. Now, if you're not familiar with Chewy, they provide pet food. I think I don't know if it's primarily dog food. We have a dog, so I only think about the dog side of things. But I was a little surprised to see, wow, man, they've been not doing great. Look at this downtrend because personally, we love Chewy. We've had great customer service with them. It's always fun to see our dog get super excited when that big Chewy box gets dropped off by UPS. And But look at the chart. I mean, the chart tells a story here. For whatever reason, Chewy, the value of the stock has not been doing well. It's just back in August, September here, we were at 95, pretty decent, but now at times below 40 here. There's a pretty good line right here we could drop. Looks like some potential solid support right there. And it's coming back down towards that. Let's zoom in a little more here. There we go. Pretty big drop yesterday. Again, high volume. That seems to kind of be the theme this week on both the hot and the not side. High volume right there. Higher actually than the last earnings report. And today down a little bit again and starting to bear down on that previous support line. So we'll have to see, does it hold there or does it break that? If it can hold there, and then you eventually break this downtrending line, there is some hope there. But, if it breaks that line, well, where's it going to go? Let's zoom out quite a bit here. It's a 3-year. Whoops, I meant to hit the weekly chart. We can do 3-year daily. That's fine for now. It's just the candlesticks are going to be really, really tiny. You can see this is a pretty significant line right here. Oh, wow, look at that. I didn't even realize that. Back here, 2019, that was resistance. Showed a little bit of support right in here, and then it's support again. So that line that we just dropped right there is actually pretty significant. It's got a lot of history to it. And Chewy hasn't always been, a not hot stock. Look at this run up. This is, bottom of the COVID crash, right about $20 a share. Moved up to $120 a share. I don't know if it quite hit it, but it was really close if it didn't quite hit it. And that was just last year in February, March timeframe. So, that's a 6-fold increase right there. And now it's given most of it back, and it's worth about 1/3 of what it was back then. One of the reasons that we had this big, look at that volume right there. Again, you can now get a good idea of how big that volume was yesterday in relation to the last 3 years. Last time that the volume was as high was this earnings report right in here on, what was that, April of 2021. And then you can see it's pretty small right now, I know, but there's a big move in the candlestick right there. But what I was getting at is the reason that Chewy is down so much is that they had slower than projected sales growth. So for whatever reason, I guess dogs are not eating enough out there. So they need some help there. I bet they could get that turned around if they could turn around their negative sales growth. But if they don't and we break this line, where are we going to? Well, at that point, you start looking at these lows right in here. And in fact, that's a good enough. Let's drop another horizontal line right there. See that on the left side right here? There's a touch, there's a touch, there's a touch. So right at about $20, $21 a share, that's a pretty significant line as well. So if we break this line, we might be heading all the way down there. So that is our not hot stock of the week. Couple announcements I want to give to you guys. If you are a Top Gun, Master Trader, or Elite Trader, we are offering a Step 3 course, and that will be this weekend. So tomorrow and Saturday is Step 3. Learn all about credit spreads, how to use them, how to manage them, what they are. So if you are a Top Gun, Master Trader, or Elite Trader, and you want to be a part of that, go ahead and email events@tradeway.com. Again, that is events@tradeway.com. Now, if you're not Top Gun, Elite Trader, Master Trader, and you want to learn those kind of strategies, because, they're kind of cool. Did you know that those strategies are ones that can make money even if the stock does not go your way? You think it's going to, it's here and you think it's going to go up here. So you put on the strategy and it doesn't go there. It just kind of goes sideways. Maybe even goes down a little bit. So if that's the case, you can still make money on that trade. And credit spreads show you how to do that. So if you'd like to learn more and you don't have access to that, go ahead and email support@tradeway.com. We would love to hook you up with all the information you need so that you can be a part of that and learn the things that you want to learn in your trading journey. All right, that's going to wrap it up for today's Stock Talk Thursday. I look forward to seeing you guys next week, Thursday at noon Central Time. We'll see you later.